Many people think that scalping is just about getting in and out quickly and taking your profits. But what separates an amateur trader from a professional scalper is precision, especially in the tools they use. Today, I want to talk about one of the most important tools that many successful traders around the world use, but few know how to properly look at: EMA 9 and EMA 21. We're not just going to tell you what these two lines do. We're going to show you how, like a skilled hunter, you can use them to find the most accurate entry and exit points in a matter of minutes. This isn't just technical analysis anymore. It's a lifestyle for smart scalpers. Let me put it simply. EMA, or Exponential Moving Average, is a statistical tool that helps you figure out which way the market is moving. But not by looking at the distant past, but by focusing on the most recent moves. The difference from the simple moving average, SMA, is that the EMA gives more weight to more recent prices. That is, it reacts to trend changes more quickly than the SMA. This feature makes the EMA a popular choice for scalpers, because when you only have a few seconds to make a decision, you can't wait for a slow indicator to figure out what's going on. The EMA 9 is an indicator of short-term market behavior. The moment the market makes a move, the EMA 9 will show it almost immediately. The EMA 21 is a bit slower, but it gives more accurate information about the overall short-term trend. The combination of these two will help you understand whether the market is really moving or just making a move. Now here's an important question. Should we just look at the cross between the two? Absolutely not. In fact, professional traders look for the structure behind the cross more than the cross itself. For example, what is the angle of the cross? How far away is the price from the EMAs? Did the cross occur within a supply-demand range? Or was it accompanied by an impulsive candle? You can't trade just by looking at the EMAs. But when you combine it with a structural mindset, that's when you become a true analyst. This is exactly where many people fail, because they only see the tool, not the mental application behind it. Why the 1-minute time frame? Advantages plus pitfalls. The main advantage of the 1-minute time frame is that it creates a lot of opportunities. Every small market move can be a trading opportunity. Skilled scalpers can make 3 to 5 good trades in a single trading session. But just as there is a lot of opportunity, there is also noise. What is noise? It means irrational and aimless market movements that only deceive the trader. On lower time frames, you will encounter this noise much more than on higher time frames. A big candle may suddenly appear, but there is nothing behind it, just liquidity or a momentary spike. Now this is where EMA 9 and EMA 21 come into play. They help you distinguish between noise and a real trend. When the price crosses both EMAs and both intersect, it means that a real change in the market trend has occurred. But professionals do not just look at the intersection. They ask, where did this cross occur? Does the time frame above confirm this? Is the price retracing from a supply-demand zone? Are we seeing a BOS or CHOCH? Thank you for liking the video. Let's go to the most important strategy from which you can learn a lot. How to use EMA 9 and EMA 21 in scalping. So far, we have understood what EMAs are and why the 1-minute time frame is both an opportunity and a trap. Now it's time to get down to business. How to use these two moving averages as a scalping tool. The first rule is simple. When EMA 9 crosses EMA 21 from below upwards, it means that the short-term momentum is getting stronger, a buy signal. The opposite is for selling, but this is only the surface of the matter. In the reality of the market, every cross does not necessarily mean the start of a new trend. Often the market is just having a small pullback or is looking to liquidate hasty traders. So here, among a few other filters, professionals add cross angle. The sharper the angle of the EMAs, the stronger the momentum. If they are very flat and flat, it means the market is stalling. EMA's separation. If after the cross, the EMAs start to diverge, it means the trend is gaining strength. This is a very good situation to continue the position. Price behavior towards EMAs. If after the cross, the candles react to EMA 9 and turn up or down, it means that the EMA has become a dynamic support or resistance. This means that a valid signal is being confirmed. Combination with market structure. Suppose you have a demand area, and the price makes a positive cross right after reaching it. This is where the perfect setup is formed. Price action plus levels plus EMA. Another pro tip is that EMAs can be used to trail a position. For example, if the price is moving above EMA 9, stay in the position until it falls below it. Exit as soon as the candle closes below EMA 9, even if you haven't hit your target. This will help you lock in your profits and prevent sudden reversals. Real-life example and analysis of a situation. Suppose you are scalping the EUR/USD currency pair during the London session. It's 10:20 a.m. and the market has made a sharp decline. You are waiting for the price to enter a previous demand area. Meanwhile, EMA 9 is approaching EMA 21, but there has been no cross yet. The price enters that demand area and makes a strong, bullish candle. At that moment, EMA 9 crosses EMA 21 at high speed and both are trending upwards. The candle that just closed is also a strong impulse candle. What does this mean? It means that we not only have a cross, but also a confirmation of buying power. In this situation, the most professional thing you can do is enter right on the close of the confirmation candle, stop below the demand zone, target either at the previous resistance level or when the EMAs start to converge again. Now imagine the second scenario. We have a weak positive cross, but the price is still stuck below a bearish order block. Here, the EMA only creates a deceptive appearance, but the reality is that until the price breaks that block, the sellers still have power. Entering here is likely to lead to losses. This difference between a real cross and a fake cross is exactly what a successful scalper needs to understand. The market is always looking to stimulate your emotions. EMA 9 and EMA 21 may tell you, now is the time to enter. But if you don't know where you are and what's behind those candles, you can easily fall prey to the market. So always look at the structural position of the cross instead of just looking at the cross. This way you can use the EMA as a precision weapon, not just a simple tool. Common mistakes and warnings. Using the EMA 9 and EMA 21 in 1-minute scalping can be profitable, but only if you know how to use them. Many traders enter trades without knowing exactly what is going on behind these lines, and that's what causes them to lose money very quickly. Mistake 1. Blindly trusting crosses. Just because the EMA 9 crosses the EMA 21, it doesn't mean the market is going to change direction. Often the cross occurs in a sideways area or near liquidity areas, and the price immediately reverses. Mistake 3. Not having confirmation filters. Trading only with EMA is a mistake. You need to combine it with price action, supply and demand zones, market structure, specific candlesticks, such as engulfing or pin bar, and trading volume. EMA is an auxiliary tool, not a standalone strategy. Mistake 4. Not having money management. Some people think that because the time frame is 1 minute, they can enter with high volume and exit quickly. But this mentality causes them to lose a large percentage of their account in 1 or 2 wrong trades. If you have used this strategy or had a similar experience, be sure to write in the comments. Let's chat and share our experiences. Don't forget to like it, because it really helps the channel grow. And if you haven't subscribed yet, Now is the best time because I'm gonna make a bunch of awesome video tutorials